What's your interpretation of this latest round of economic data, and what does it mean for the overall growth rate by year end? Is it at risk?
So we've already got the numbers, and I think clearly, even though I have to say the expectations for markets are already pretty low, but the data also managed to miss the expectations. So I think that just tells you that how bad the activity momentum right now in China is right now. So I think what is interesting to note is that the consumption is still struggling quite a lot because of the property sector slowdown. The prices are actually falling at a faster pace in August, and interestingly, the manufacturing capex is actually doing pretty well as the exports. But if you look at the infrastructure investments, they are actually falling down again, despite the pickup in special local government bond issuance in August. I think to some extent there may be some factors related to the weather. But I think the local governments right now, they are still really struggling because of the collapse in the land sales, and the fiscal revenue has also been pretty weak. And they are under a lot of pressure to deleverage to contain the level of implicit debt. So I think that just shows that even though the borrowing is picking up, but it's not really translating much into an increase in the infrastructure capex. So overall, I think the downside risk of the deflation, a sustained deflation, is rising in China. And we've also recently lowered our GDP forecast for China from 5% to 4.8% this year, meaning that they may not be able to meet the government's target.